Good morning, everyone. Brian Hoops here, Midwest Market Solutions, Market Insider TV. This is our opening commentary on Friday. It's November the 1st. Thanks for joining us this morning as we take a look at our trading day ahead. Well, we have a lot of news. A lot of it's economic news out this morning. We'll be talking about that. Let's first go over some of the overnight markets. Grains just closed here. The dollar is a little bit weaker this morning. Non-farm payrolls is a big market mover normally and hasn't really seen much volatility. You see the stock market is up. It was higher going into the report, and after the report, not much change there. Crude oil is firmer, up 2.5% again. So there was a big gap on the charts left Sunday night. We went and filled that gap, and we're trading above it into some retracement levels. We look at that on our closing commentary. We look at technical action, and that's what we're seeing. We're into retracement levels. The 78% of the previous down leg is being tested here this morning. Stock market's higher, as I mentioned. Gold and silver recovering after yesterday. We saw a lot of volatility and a sell-off in the marketplace, but we're seeing a nice recovery here. And corn's up 2.25 overnight. Beans up 8 cents. Meanwhile, we have soybean meal down just fractionally, but that is at new all-time or testing contract lows, I should say. Look at the bean oil surging higher, up 2%, kind of mirroring what's happening in the crude oil. Yesterday, we saw that big move in the crude and follow through in the soybean oil. And soybeans kind of caught in the middle between meal and the surging bean oil contracts. As we've been looking at from a technical standpoint, there's really only two markets that, in the grains anyway, that are showing technical strength, technical uptrends, and that is bean oil and oats. And look at both these markets, pretty strong. Oats above $4 for a period of time yesterday. Wheat's higher as well, 6 higher. Chicago, Kansas City's up 4 to 4.5 cents there. And let's get into some of the news and features here as we talk about our morning. So I'll be doing RFD TV this morning at 8:15 Central Time. Hope you have a chance to tune in to that. All right, South American weather, it's nearly ideal for corn and soybean seedings, and then crop development afterwards. It's a wet forecast. They're getting a lot of the crop seeded and getting rain on top of it. So early stages, off to a great start. Forecast for the U.S. for the hard red wheat areas, we're calling for the best beneficial rainfall potential since last spring, with additional rainfall noted this weekend. That will help improve crop condition ratings. We've seen some rain already. We're going to see more Sunday night into Monday, and I would expect Monday afternoon we'll see improvement in those crop ratings, which were the second worst of the last 37 years. Argentina corn planting progress, we're at 29% complete. So we're caught up to the average of 31 and ahead of last year's pace now. So, they had started slow and are progressing very quickly because of the beneficial weather. I mentioned meal testing its contract lows. In fact, we've closed lower for 9 straight sessions. It's testing the contract lows this morning once again. And, meal's an indicator of where the soy complex will probably end up going. Soybeans, I think, will follow the meal lower, as this is indication that there's a big crop expected from the traders in the meal market. They're expecting a big crop out of Argentina particularly. CME Group, FedWatch has a 93% chance of a quarter-point rate cut next week, and just about a 7% chance of leaving rates unchanged. Very everyone's looking for a rate cut next week. That would be a surprise if we don't get that rate cut. Then this morning, we talked about non-farm payrolls. The U.S. economy only added 12,000 jobs in October, a terrible, terrible number. That was well below expectations of 106,000. In fact, that's the lowest number of U.S. jobs added since July of 21. Private payrolls were actually a net negative 28,000, meaning we lost 28,000 of private payrolls. That means if it wasn't for government jobs, October would be the first negative payroll month since December 2020. And we're talking COVID when we're talking about that. So this is really a poor number. Unemployment rate did stay the same at 4.1%. But overall, disappointing number for this economy. Cash cattle trade this week has been 190 in the north, 296 dress, maybe a little 297 leaking out, and in the south 190 live. That's steady. Asking prices for the rest of the show list today, we're at 193 in the south, 299 dress for the remaining cattle. I don't think we get that today. Cutout values are on the defensive. And another piece of negative news here is the steer carcass weights. They came out yesterday. They're up 10 pounds on the week, 33 pounds above year-ago levels. Overall, a bearish number. We have more supply, when we have, we don't need to buy as many cattle because they're all heavier. They're really heavy cattle. It does sound like the numbers are pretty tight in certain areas, and that could be positive for next week. But starting to see, market technically not acting very strong, fundamentally also cutout values declining, steer weights on the rise, cash was no better than steady this week. All that tells us that maybe we're getting close to some sort of an intermediate top. Now, October went off the board, big increase big premium over the December contract. So we might have to narrow that spread just a little bit, but we're looking at selling rallies, becoming defensive on rally attempts. All right, I'm going to sign off and wish you a great day of trade. As always, contact us. We'd be glad to talk markets and strategies with you. This has been Brian Hoops from Midwest Markets. Talk to you soon.